Hey there traders, and thank you for joining me for this free video from the stockbandit.com. I'm sure glad that you made it. Now, lately and in recent months, for much of this year for that matter, with so much focus on the economy these days, both domestically and globally, it's no big surprise that we've seen a big fixation on gold. Now, it's the second highest capitalized ETF behind the spiders. And currently, it's got about 3 times the capitalization of the QQQ, just to give you an idea of how much money is in GLD. That's a lot of money. But let's take a look at the chart here. You know, some say that we've seen a top in gold, and I think that all just kind of depends on the time frame that you're operating on. Back here in September, we made an incremental new high and then failed. And since then, we've been working our way lower here. You can see that we have kind of settled into this wedge here more recently. All right. Now, in the short term, today we saw gold down 4.4 points. Okay, that's $4.41. And so we've now got this gap to the upside, short term, up to about 166. But that's not really what's important on this chart. In fact, let me just zoom out here. I'm going to go, in fact, to a weekly chart. Does this look like a broken trend to you? Not to me. We've got a very long-term uptrend in gold. In fact, I could just extend this down. We're going to get not the cleanest trend here, but it could be modified. So I'm really just drawing this up to about this point, which really goes back into January of this year. We've got this uptrend line, and even prior to that, we have such a long history here of higher highs and higher lows in GLD. So what I'm looking at is this big triangle here. We've got this wedge, which really is marking what is a pullback within a longer term existing uptrend. So here's the plan. Above 170 and GLD is back on the rise. Below this 160 area and GLD corrects further. Now in the short term, we've got this area right here, which is about 154 to 156. So that's kind of a short-term zone. If we undercut this 160 area, that's going to be the next short-term stop, and then beyond that, I probably would be looking at a test of this July low around 144, kind of right in there. But for now, we're still caught in this range. So the big two levels are 160, sparking a move to the downside, or a move back up through 170, sparking a move to the upside. Okay? It's funny, how many of the answers to our trading strategy really just reside on the charts. So that's really the place to be looking. Now, if you're a trader and you need a little bit of help out there, you're looking for some answers to the way that I trade, I've put all that into one big resource. It's at the Stock Bandit University. So head over to the site and be sure and check that out. I put everything about my trading history, everything about the styles and the strategies that I use in the market on a regular basis in those lessons there. So needless to say, those courses will equip you to not only read the charts, but to also be able to act in any kind of conditions that come along. They've been really well received, and so it's no wonder that they come with a money-back guarantee. That's at the stockbandituniversity.com. Thanks again for joining me for this episode. I will be back soon with more for you, but until then, trade like a bandit.